Hey there friends, welcome back to episode 22 of the weekly portfolio update where we're growing 50k into $1 million. Today's Nugget section is going to be on FMG's declining share price, so go grab your beer, grab your Twiggy sticks and let's jump into it. Should I shave this beard off? Nah, let's get into it. Alright, so it's benchmark time. So how did the XJO fare this week? Look who's a little green cutie. You are XJO, you are. Up 0.4% for the trading week. Well done, mate. So how did our stocks do this week? Ouchie mama. We're down 1.93%. The All Ords came in and stole our candy this week. But seriously, if someone says FMG, I'll throw my Twiggy stick at them. I'll let you guys use that one. So coupled with unfortunate economics around iron war and first half year results, FMG was down 13% this week. Champion retreated back at 6%, Clearview down 4%, and MHJ down 2%. Ive Group held on to their gains, which was good, but how funny. I was watching the iron so much that I didn't even notice Capral up near 10%. That makes the beer taste better. Aurelia was also up with the copper, grabbing another 3.45%. Now for the updates on the list. So here's all last week's buys, holds and sells. The ones that changed are as follows and why. So Capral moved from hold to buy with its recent uptick, and Twiggy moved from buy to hold as it closed below last month's close. Only by bloody 2 cents. The rest are the same, but remember guys, do your own research. Alright, so since inception, we have a pure capital gain of 3.07%. The portfolio still has a dividend return of 2.16%, and this gives us a total return of positive 5.22%. It's good to see all the stocks are in the black, only just for Twiggy, but Capral and MHJ, yous are looking pretty bloody sexy. Alright guys, by popular demand, today's Nugget section is going to be about discussing FMG's declining share price. So you can already see that it's a top left, bottom right slippery dip over the last week of around 11.66% gone. Not good at all. And on the 16th of Feb, smack bang in the middle, FMG released their half year results and announced their dividend to the market. Unfortunately, after the news, the share price declined 7% between Wednesday and Friday. Now let's see if it was because of the report. So straight up, FMG released strong operational performance with record half-year shipments of 93.1 metric tons. Hurrah! The report's looking good so far, right? Now we already knew this figure from the December quarterly, so it was expected. Now for the C1 cost. And for those that don't know, C1 cost is the direct production cost of iron ore. The C1 cost for this half was 15.28 wet metric tons. Now unfortunately, compared to last reporting periods, now this is up around 15 to 20% due to price escalation of key input costs like diesel, consumables, labour rates, as well as the integration of Eliwana and mine planning. It is still very competitive in the industry though. Next we had 8.1 billion in revenue compared to 9.3 comparable in H121, which is about a decrease of 12%. Even worse, H221 was 12.9 billion, which was a 37% reduction in revenue. Ouch! So obviously with these reductions in revenue, the same story flows into the EBITDA, net profit and cash flow. But I won't bore you with those figures. Let's talk about the dividend that was announced. So a fully franked dividend of 0.86 cents per share was announced, comparable to $1.47 last H121, which is down 41%. Comparable even worse, $2.11 for the last half, which is down a whopping 59%. And to top it off, the payout ratio was only 70% compared to 80% last half. So it looks like a story's emerging here. Why are we seeing less revenue and less dividends paid out to shareholders when the company is shipping record shipments? Can you guess? Yeah, that's right. It all comes down to the underlying commodity, which in this case is iron ore, obviously. So let's check out the charts again. Unfortunately, we've seen the same situation that occurred last dividend when the ore price was depressing. Now, I'm not going to go point me fingers at any countries for why this is happening, but if this iron ore spot price doesn't start turning back around, I reckon we might be forced back out of FMG at our stop loss of around $17.80. Oh well, time will tell, but I hope that answers some of your concerns. Come on spot price, be nice to us next week. At least the Olympics finish on Sunday. Alright, so our cash account is still at $822. So if at $822 in cash, plus our 78,181 in stocks takes us to an overall value of just over 79,000 bucks, which is about a negative 1.91% total portfolio gain from last week. Boo, we're under 80k again. Damn you, Twiggy. Alright guys, that's a wrap. So you know the saying, keep healthy and wealthy. See you next week, guys.